Lindsey Bell here to break down these crucial moments of the trading day. Plus, Meg Terrell on Johnson & Johnson's big rally, and Truist's Beth Reed on why she raised her price target on Lululemon by more than $100 today. Stocks are in rally mode, though, for the first time in 3 days. We're now at session highs, having a little climb here into the close. Joining us is Lindsey Bell, Chief Markets and Money Strategist at Ally Invest. And Lindsey, just talked to Raphael Bostic, Atlanta Fed President. What was notable to me is, so all the Fed presidents are ready to raise rates steadily, which he confirmed. But he said that the difference in opinion right now at the Fed is on what it's going to do to the economy. And he sounded a lot more cautious than some of his peers, for instance, on the uncertainties that are in the economy right now. He cited real wages actually being negative, said the global growth from the IMF taking down forecasts today is an uncertainty, and that they're willing to sort of see how the economy and the markets digest the rate hikes. It's very different from Bullard talking about 75 basis point hikes, not taking that off the table. How do you think it's all impacting the market?
Yeah, I mean, there's clearly two sides to this story, and I think the reality is that we're kind of in this wait-and-see mode where we're trying to determine which way growth goes, and the Fed's going to play a very critical role in making that determination, right? So it was encouraging to hear that he's saying that they're, reiterating basically that they're going to be data dependent, they're going to follow and wait and see what happens to the growth trajectory from here. It also, is probably comforting to some degree to investors that potentially he's taking off that 75 basis point hike at the next meeting. But the market is already pricing in all. Right. But the market's already pricing in several rate hikes this year. We're looking to get to the end of the year with 2.5 to 2.75 on the Fed funds rate, which according to him is the neutral rate. So that's a very swift pace to get to that level. And there's going to be market implications there. You've already seen a lot of volatility in the market just as participants really try to understand and gauge the speed and the direction in which the Fed's going to go, not only with Fed funds rate, but also with balance sheet reductions.
Which he was interesting on that, too. Sort of didn't say it was on autopilot, said that they would react if the market can't digest all the QT, the tightening and shrinking, they would readjust, which I thought was notable. Lindsey, at the same time, yields keep going higher. 10-year yield is now almost 2.95%. Today, that's not holding back tech stocks or stocks overall. Is that a signal that maybe it's really getting fully priced into the equity market?
I don't know if it's necessarily a signal. I just think today we're in a market where different things are shining. We've got a great earnings season so far, and today the market is focusing on that. They're focusing on the VIX that's coming down, and of course, oil prices. The fall in oil prices helps the inflationary story, right? And even some of the data that we got this morning, the housing starts data, while up surprisingly to beating the consensus estimate, you did see that single-family housing was down, likely being impacted by those higher mortgage rates. So higher interest rates are flowing into the system. They are impacting demand and ultimately should impact the inflation trajectory from here. So again, wait and see what it means for inflation.